First of all, thanks to everybody for giving us some of your time this afternoon. What we're going to talk about today are some regulatory changes. We do want to apologize for anybody that had tried to get on to the previous webinar and was unable to due to the demand. We have resolved those issues, and you'll be able to see actually an improved webinar. We do have some handouts listed. If you look in the GoToWebinar information panel, you'll see that there's a couple handouts. When you open them, they should look like this on my screen. So you'll see there's one for property managers, and there is one that can be handed out to residents. We will have some time for questions at the end of the webinar, but I just wanted to let you know that those are there, and you can download them via the webinar panel. So without any further hindrance, we'll go ahead and dive right in. If you do have any questions, there is a question box. Please feel free to submit your questions, and we'll go through those at the end of the webinar. Okay, so what we're going to look over today would be some areas of change in the Ontario market. So these areas are the Ontario Clean Energy Benefit is being eliminated at the end of 2015. The debt retirement charge exemption is becoming an option as of January 1, 2016. The net impact between these two, we'll go into a little more detail, but it's basically electric costs are going up for owners here. And as a sort of silver lining, the Ontario government and the Ontario Energy Board are rolling out the Ontario Electricity Support Program for low-income households. That will provide them some support for their electricity bills. We'll go into some details on that. So first, the Ontario Clean Energy Benefit. Many of us are already familiar with this and how it affects our bills. Essentially, it's a 10% discount on the total electricity billed for individual bill payers, as well as bulk bills that are for multi-residential buildings. There are some differences between buildings that are bulk metered and buildings where individual suites are metered directly by the LDC. So if you have buildings that are mostly metered directly by the LDC to each suite, the elimination of the OCEB won't affect your buildings as much, because on your common area you're only allowed a certain threshold of OCEB that ends up working out to about $50 monthly. If, like most owners and managers in Ontario, your buildings are bulk metered, you will see about a 10% difference because of the elimination of the Ontario Clean Energy Benefit. Now, that being said, the debt retirement charge, you are going to be eligible to apply for an exemption. This will offset some of the increased expense due to the OCEB elimination. So the debt retirement charge exemption begins as of January 1st, 2016. It'll apply for bulk metered residential buildings as well as individual residential bill payers. Basically, if you qualified for a multi-residential Ontario Clean Energy Benefit and you reported the number of units on your self-declaration form to your LDC, you'll also qualify for a debt retirement charge exemption. Now, the DRC exemption does have a threshold, and it's approximately 1,500 kilowatt hours per residential unit. The vast majority of buildings are going to be well below that threshold. Just to give you some examples, gas bill payers, gas heat usually use about 215 kilowatt hours per month, and gas heat non-bill payers usually use about 400 kilowatt hours per month. Electrically heated buildings are a little bit harder to quantify as an average, but they would be probably somewhere between 700 to 900 kilowatt hours per month, so still well below the 1,500 kilowatt hour per unit threshold. And any of the leftover credits will flow over to benefit to the common area and the commercial units if those units are all on the bulk meter. Currently, the debt retirement charge is 0.7 cents per kilowatt hour. And when you're able to apply for the exemption and it goes into effect on January 1st, that 0.7 cents per kilowatt hour will go away. For any of the buildings that are suite metered directly by your local distribution company, because your common area would be on its own meter, and the owner is looked at by the OEB as a commercial entity in that case, you would not be able to apply for this exemption for your common area. Your individual suites, if they're paying the bills or if you're paying the individual suite bills, those bills the DRC exemption would apply to. In order to receive the DRC exemption for your bulk metered buildings, there are forms that the LDCs are requiring. It's important to note that unlike the OCEB, these exemptions will not be retroactive. What that means is if you discovered today that you have a building that should have been receiving the OCEB benefit, the 10% off, and it wasn't, you could actually go to your LDC with the proper application and they would give you a credit back to when the OCEB started in January of 2011. However, the OEBs learned from that and they will not be doing retroactive credits for the debt retirement charge exemption. So what this means is you'll want to make sure that you can get the forms either via our website, or you're obviously always encouraged to contact Wyse as well, your contact at Wyse, whether it's your salesperson or a person that you've worked with, otherwise whoever you feel comfortable with, they can certainly get you the forms and help you work through that process if you have any questions. The forms are very similar to the forms that would have been filled out for the OCEB, the multi-unit self-declaration form. Why don't I just go ahead and pull one of those forms up just so you can get a look at what it looks like. So here is, in this PowerPoint presentation, which if you haven't already received a copy, I can certainly send you a copy. There is a link to this Wyse website that talks about the DRC exemption, has some instructions on how to apply, and then we also have listed provider websites along with their debt retirement charge exemption forms. So this is what they look like. Basically, they just need some information like the account number that would be the account on your bulk bill, the name on that account, and the number of residential units. That's very important. That's how they determine what the threshold on your bulk bill should be. And then at the top of forms such as this one, it will tell you where to send the completed form. So typically the electronic method's the fastest if that's an option with your particular LDC. And then you can make sure that you're getting that debt retirement charge exemption well ahead of the deadline to make sure it's applied January 1st, 2016. If you happen to have buildings that are on Synergy, Wyse has already taken care of getting these forms for you and putting in account numbers. There are things like your signature that you'll still need to sign, and if we haven't already been in contact with you, you would expect a contact from us shortly on that topic. So what we've done as well to give you an idea of a real example, a real impact, what this will look like, is we've put together just some numbers here for a bill, a typical bill. And on the one side, you'll see what a common area bill would look like in November of 2015, so today. And then on the right side, you'll see what that same bill would look like in January of 2016. You'll notice here on the left, the OCEB is included as your 10% credit. On the right, that OCEB is no longer there. But on the right, the debt retirement charge is exempt. So what the difference between these two, the net difference, ends up being about a 6% increase. So it is substantial, especially here in Ontario, where we've already dealt with a long history of electric increases. So we certainly empathize with the challenge there. And we're always here to help if you have questions, or if you're looking for some guidance on what the best way to help control your electric expense, feel free to reach out to us. For an unmetered building example, similar situation where we have all the different charges that you'd see on your bill in November, as well as the different charges you would see on your bill in January. And you'll notice in November, the OCB debt retirement charge, these are both there. And in January, they're no longer there. Again, the difference here is about 6%, an increase of 6%. I just want to remind everybody, if you are seeing things in these slides or that I'm talking about that you want to know more about or you have a question about, do feel free to click over into the webinar panel, and there's a question box that you can submit your questions into, and we'll go ahead and get all those answered at the end of this webinar. As well, feel free to send anybody at Wyse that you're comfortable with emails if you have any questions, or give them a call. We're always happy to talk to you. Okay, so we've talked a bit about the differences that mean your bill will increase. There is a little bit of a silver lining, and that is the Ontario Energy Support Program. And although that's targeted directly to low-income bill payers, there are some ways that owners and managers can benefit from it as well, in kind of an indirect manner. So we'll go into that here in just a little bit more detail. So this Ontario Energy Support Program, often referred to as OESP, it starts on January 1, 2016. And the program's targeted to reach roughly 1/3 of Ontario renters who are already on social assistance, and then a large percentage of Ontario's renter population in general will probably be eligible. I'll show you some of the scales for how the OEB and the government are determining who's eligible. The program's generally targeted for low-income households or households that are on special situations such as electric heat or medical equipment. Also changes the credit. We've determined the average credit will likely be about $37 per bill for electric bill payers. The minimum credit on the OEB sliding scale is $30. It's important to note that only residential bill payers will be eligible. So if you have a building that has any number of low-income households, but they're not direct metered by the LDC or sub-metered by a company like Wyse, then those households won't be eligible for this credit as they're not paying for their own electricity. The program will be paid for with a general rate rider that's baked into the normal increases that we see here in Ontario. And it does offer a chance to lower electricity costs for low-income households. So here is the first table for standard low-income households. And you can see that the Ontario government and the OEB have determined that there's a range between less than $28,000 and greater up to $52,000 where a household would be eligible for a credit. And this is determined by the number of people in the household as well as their income. And you can see here the credit starts at $30 depending on how many people are in your household, and increases up to $50. This is a table for non-standard low-income households, which would include households that use electric heat or medical devices. There are a few other non-standard criteria, and those are included in the OEB website information, which we have a link for here at the end of the webinar. And you can see the amounts of credit here are slightly higher. So for the low end, we start at $45, and at the high end, we're at $75. So if any of your residents have questions, or you hear about this, or you have questions, there's an OEB website as well as an OEB central support line, which is open. We have links to that at the end of these slides. The online application process has already opened as of October 29, 2015. And the basic way that the government and the OEB are verifying this is they're trying to compare reported incomes with Stats Canada and with Revenue Canada to confirm incomes. From our work with the committees, it's not looking to be a very cumbersome application process. It's pretty straightforward. And processing, though, is expected to take about 6 to 8 weeks. So as of January 1, this credit can start appearing on residential bills. It's prorated, though it's not retroactive. And what that means is if for whatever reason the central service provider doesn't process an application until February that may have even been submitted in November, the resident's still going to receive their full credits for up to 2 years. So as far as application and reapplication, once you're approved, you receive this credit on your bill each month for up to 2 years. And then at 2 years, you can decide to reapply, or if your income is changed, you wouldn't be eligible if you reapply. So as far as communications, sub-metering companies such as Wyse and other LDCs have links on their websites. You can also go, there's a link here for the Ontario Energy Board's information page. Wyse will provide on-bill messaging for tenants, as well as direction to the application portal for tenants. All the applications will be routed through a central service provider sponsored by the Ontario Energy Board. So Wyse has trained our customer service center for basic questions, but this is a program that's primarily handled by the Ontario Energy Board, and the role of sub-metering companies and utilities in the Ontario Electricity Support Program is basically to administer it on the bills. So questions, applications, issues with the OESP credit itself will go through a central service provider. So your staff shouldn't need to be burdened with any of the questions and issues there. They can certainly direct the tenants to us or to the central service provider. Wyse will also continue to provide email blasts or webinars if anything changes, as well as updates in industry journals. And again, here's the link to the Ontario Energy Board. I'll just show you what that looks like here briefly. This is their information page on the Ontario Electric Support Program. And what it has is some information to help if a tenant or a household's coming to figure out, how do we apply for this? Do we qualify? Can it help us? The OEB's website's really good at helping to walk them through those questions. And if they do need to apply, they can go directly to the website here and apply through the OEB's website directly. Okay, so I mentioned earlier that there are ways that owners and apartment managers can benefit, although in a kind of indirect way, from the OESP credit. And that is because there are several tenants that are not bill payers currently and therefore would not qualify for this credit. Right now, even though you're capped on how often you can increase rent and what that amount can be, you're not able to offset the percent of increase that electricity is flowing through to your bottom line. So with the OESP program, there are benefits to the tenant to decide to become a bill payer. So for example, the average non-bill payer bill would be somewhere around $60. If they're not paying a bill, that's the expense that they're incurring. Right now, the owners are paying that, and you just have to figure out how to get that out of rent, right? So if you convince that tenant to sign up to be a bill payer, then they can qualify for, let's say the average was about $37. That'll decrease the cost that they have to pay, essentially. Furthermore, if they become a bill payer, often we find they're much more conscious of what they're using, so they're going to have a smaller bill anyway. So, the net result here is that the bill payers, when a tenant goes from being a non-bill payer to a bill payer, if they're in a low-income household, they save on rent. There's a mandated rent reduction, which Wyse has a program that we're happy to help any owner who's interested in figuring this out. We've done several of the calculations, and we know both methods quite well, and we can help find the one that works best for you. And so when that tenant goes from being not a bill payer to a bill payer, their rent gets lowered, and their electricity bill, which they now receive, is heavily subsidized through this OESP credit. That means that for owners, that kind of uncontrolled cost that you can't keep up with because of caps on your rent increases are now part of the tenant's costs, and often what you're reducing in terms of rent reduction is quite a bit less than what the electricity expense ends up being over time.